To keep yourself updated, subscribe to Indigo Learn and click the bell icon and download our app OneFin to start learning on the go.
Hello, my dear friends. Very good evening and a warm welcome to you all for discussion about a beautiful subject, indirect tax laws of our CA final. And we recently completed a discussion on CA Inter RTP discussion. Now it's time to talk about CA final RTP for May 2022. Something very interesting. And of course, I need not tell you the importance of RTPs. You guys have been enough heard about this at your CA Inter level and also at CA final level in group 1 also. And you guys are in group 2. So I'm sure you guys know very much and you guys have a lot of clarity in terms of the importance of this RTP, because RTP consists of two important things. One, the set of interesting amendments which have come up in this attempt compared to the previous attempt, and also gives a good clarity of thought in terms of what kind of questions can come in exam. And sometimes there's also possibility that some questions will straight away come to the exam. So from all the parameters, this RTP discussion will be very useful for you. And in the course of discussion, if you guys have got any queries, any doubts, you can feel free to ask, comment in the chat box. We'll be more than happy to reply. Don't hesitate at all. Come on, my dear friends. Without any delay, let's begin the discussion on CA Final RTP for May 2022. Come on, let's begin. First, the first interesting question, as we know that the first case question will always be a case study based question where they'll give an interesting circumstance and situation, and on that circumstance situation they keep asking some wonderful questions on that circumstance and situation. So let's see what are those. Come on. Zoom Air is an airline company operating domestic as well as international flights. Very good. It's something like an airline company which is operating both domestic and international flight. The head office of Zoom Air is in Mumbai, and the company has also obtained registration under GST in each of the state from where the flight operations are being carried out. Very good. That is correct also, because we know the fact that under GST law, registration is to be obtained state-wise but not centralized. Unlike in income tax where we have got only one PAN, under GST law, we should take registration, state-wise registration, but not centralized registration. Next point. During the month of January, following transactions were undertaken by it. First, Zoom Air sold air tickets worth 5 lakhs during the month from its head office. Where is head office? Maharashtra. And breakup of airfare is as follows. Let's see what are the details given. First, basic fare excluding GST is 4 lakh rupees. Brilliant. Then, passenger service fee and user development fee inclusive of GST is 1 lakh. That is PSF and UDF. In fact, my dear friends, this PSF and UDF is levied by airport authorities, but they will tell the airline company to collect from customer on behalf of airport authorities. See now, both PSF and UDF are statutory fees. That's what I just told you, that they are levied by airport authorities, but they levy the responsibility on the airline companies to collect from customer on behalf of airport authorities. What is the language? Passenger service fee and passenger user development fee inclusive of GST is how much, my dear friends? 1 lakh. I hope it makes sense. Next. Both PSF and UDF are statutory fees which are required to be collected by airlines as per government directions. It is not the interest of the airline company, but it is being collected because of government directions. Then, and authorization is given to airlines. Aforesaid amount of PSF and UDF are inclusive of GST. PSF and UDF are remitted by airlines to the airport authority. Further, the amount of PSF and UDF is separately disclosed in the invoice issued to the customer by Zoom Air along with applicable GST. This is something like Zoom Air is acting as a pure agent in relation to PSF and UDF. They are acting as a pure agent and collecting from the customer on behalf of airline company. The point is very clear. They are collecting from customer on behalf of airline company where they are acting as a pure agent, and moreover in the question only they specified that it is separately disclosed in the invoice given to the customers. Then, airport authority pays an amount of 5% of PSF and UDF collected as collection charges to the airlines on which GST is applicable. So this will become income for Zoom Air. Then there is no levy of PSF and UDF on the tickets booked by Zoom Air for its own crew, that is a cabin crew or other employees. So for their own employees, there is no question of PSF and UDF. PSF and UDF is only for their customers. So this PSF UDF is collected by the airline company from the customers on behalf of airport authority, where they're acting as a pure agent. So on this 1 lakh, question of GST will not arise. But Zoom Air is making an income of 5% of that is 5% of 1 lakh, which is 5,000 as collection charges, which is an income for Zoom Air. Next. Zoom Air head office, that is Maharashtra only, has collaborated with Supertrip India, an online travel portal, providing services to customers by way of booking air tickets through its electronic commerce platform and registered under GST in the state of Maharashtra. Very good. During the month, Supertrip India booked tickets for 2 lakhs for customers of Zoom Air. So for customers of Zoom Air, they booked tickets worth 2 lakh rupees. The amount was remitted by Supertrip India to Zoom Air after required adjustments as per GST law in terms of tax collection at source at 1% or 0.5 and 0.5 as applicable. Friends, there is an interesting concept that when supply is made through an e-commerce operator, and if consideration is collected by e-commerce operator, then provisions of TCS under section 52 will apply, where the rate of TCS is 0.5% plus 0.5% or straight away 1%. That is the rate of TCS which is applicable, and that TCS will again come back to Zoom Air as TCS credit, which will come and hit in the electronic cash ledger once the TCS credit is accepted. Next line. In addition to the aforesaid amount, Supertrip India charged commission from Zoom Air at the rate of 5% of basic fare of air tickets booked. So this is an expense for Zoom Air, for which Supertrip India will charge GST and Zoom Air can claim input tax credit. No doubt about it. How much is that 5% of basic fare? Which is 5% of 2 lakhs, which comes to 10,000, for which bill is given by Supertrip to Zoom Air, obviously. And that will become output tax for Supertrip and input tax credit for Zoom Air. Next point. Zoom Air head office charged 100% cancellation fee. What did they charge, my difference? 100% cancellation fee from the customers for the bookings made in prior months. So if they cancelled, they collected 100% cancellation fee. And the amount of cancellation fee charged was 1 lakh inclusive of GST. And instead of actually collecting the cancellation fee from the customer, such amount was adjusted against the booking amount and the GST discharge at the time of initial booking. Obviously, when starting only booking was done, that time itself, GST would have been already paid. However, PSF and UDF amounting to 10,000 charged from customer against such booking were refunded. So for customers, they did not refund the booking amount, but they refunded PSF and UDF. That much extent refund has been done. Next. Zoom Air provided gifts in the form of air tickets to 10 of its employees based at its head office for an amount equivalent to 60,000 each. So this technically becomes gifts by employer to employee. I repeat, what is the language by difference? Gift by employer to employee. So Zoom Air provided gifts in the form of air tickets, to 10 of its employees based at its head office for an amount equivalent to 60,000 each. So when 60,000 each, my dear friends, I'm sure we all know the concept that gifts up to 50,000 is not taxable under GST law. But in more than 50,000, entire amount is taxable. So straight away, 6 lakhs will become taxable. and is clearly given no amount was recovered from the employees for such air ticket. So for such air ticket, no amount was recovered. This point is also given in the law, my dear friends. Next point. Zoom Air has a corporate tie-up with Welcome Hotel located in Rajasthan for its stay of its crew members. For January month, hotel issued an invoice of 5 lakhs in the name of Zoom Air head office Mumbai. So obviously, my dear friends, hotel will charge CGST and SGST, and head office cannot claim input tax credit because head office is registered in Maharashtra. It is always a thumb rule principle that a registered person in one state can claim credit of CGST, SGST paid in the same state, and he can also take credit of IGST, but he cannot take credit of CGST, SGST paid in different state. This is always a thumb rule, my dear friends. I repeat once again, a registered person in one state can claim credit of CGST, SGST paid in same state, and he can also take credit of IGST, but he cannot claim credit of CGST, SGST paid in different state. This concept is very simple. Then, Haryana office of Zoom Air has provided services. Come on, who's that, my dear friends? Haryana office of Zoom Air has provided services by way of sale of online advertisements. By way of sale of what? Online advertisement space to Amazing Private Limited, a company registered in the state of Haryana for promotion of Amazing Private Limited's products. And amount charged for such service by Haryana office of Zoom Air is 5 lakhs. So it is sale of what, sir? Online advertisement space. Online what space? Advertisement space. Then all the amounts given above are exclusive of GST unless otherwise specified. Opening balance of input tax credit of Zoom Air and Supertrip India for the 11th tax period is nil. It's 0. So there is no opening input tax credit. Subject to the information given above, assume that all the other conditions necessary for availing ITC have been fulfilled. Assume that there is no other outward or inward supply transaction apart from aforesaid transaction in the month of January. So in the month of January, apart from this, there is no other transaction which is to be there. Are we clear? Everybody? Good. Then GST is applicable in the aforesaid scenario at 18%, ignoring CGST, SGST, and IGST bifurcation for the sake of simplicity. So much content already they gave, and they are telling simplicity. See next. In case of cancellation of tickets, in case of what? Cancellation of tickets, Airport Authority and Zoom Air had an agreement that PSF and UDF related adjustments shall be finalized at the end of financial year. That is during the month of March. And right now we are in the month of January. So in this month, there is no adjustment that is required. Further, separate GST invoice shall be issued to carry out such adjustments in the books of accounts. Very good. So in Jan month, there is no treatment that is required to be given. See next line. Based on the facts of the case scenario given above, choose the most appropriate answer to question number 1 to 5 below. What is the first thing they ask, my dear friends? The gross GST liability. Come on, what is that line? The gross GST liability of Mumbai head office. Which office they are asking, my dear friends? Mumbai head office of Zoom Air for the month of January. Only for Mumbai head office. Let's see. Mumbai head office, what are the figures? On this 4 lakhs, we'll pay GST. We'll also pay GST on this 2 lakhs. And we'll also pay GST on this 5%. That is 5% of 1 lakh, which is 5,000. So 4 lakhs plus 5,000 plus 2 lakhs. 6 lakhs, 5,000. Plus again 6 lakhs here. So total value of supply for head office is equal to total value of supply for head office is equal to 12 lakhs 5,000. On this GST at the rate of 18%. Come on, let me calculate, my dear friends. Let me use a calculator. 12 lakhs 5,000 into 18%. That is coming to 2,16,900. 2,16,900 is the GST payable by the head office. Let's see which option is most suitable there. 2,16,900, option A, my dear friends. The next, determine. I hope you got clarity, my dear friends. Interesting question. Second point, determine all kinds of credit. When I say all kinds of credit, this also covers TCS credit available only to Mumbai head office of Zoom Air for setting off against GST liability for the month of Jan. They are talking only about head office input tax credit. Let's see that. We discussed that here. Super Trip will give a bill for 10,000, correct? On this 10,000, 18% GST is 1,800 plus TCS credit 2 lakhs into 1%, which is how much? 2,000. So my total credit will be 3,800. That's it. That is my total credit available to my head office, nothing else. And this credit and all, corporate tie-up and all, that credit I should not take into account. Because we can take credit of CGST, SGST paid in same state and also take credit of IGST. But we can never take credit of CGST, SGST paid in different state. That is not allowed in the law. Next. Assuming that customers in point 1 of the case scenario given above are registered customers and all other conditions for availment of ITC are complied with. What is the amount of ITC available? First point is what? First point is that 4 lakhs plus 1 lakh. But this 1 lakh is inclusive of GST. That you have to be careful. That 1 lakh is inclusive of GST. So will you calculate 4 lakhs into 18% plus 1 lakh into 18 by 118? Let me calculate. 4 lakhs into 18% is 72,000. And 1 lakh into 18 divided by 18 by 118. It is coming to 15,254. Total is 87,254. That becomes the amount of input tax credit available to the customers. If the customers are registered persons, obviously, because whatever GST they paid on PSF and UDF, that also they'll take credit. Obviously, they'll take the credit. Why wouldn't they take the credit? No doubt about it. Clear, friends? Excellent, interesting concept, no doubt about it. Next, question number 4. Choose the correct answer in relation to transaction between Haryana office of Zoom Air and Amazing Private Limited. Service is the nature of, first of all, let me see the case. Service by way of online advertising space. Okay. It is sale of online advertising space for promotion of Amazing Private products. And we are in Haryana. They are also in Haryana. So there is only a question of CGST and SGST. No doubt about it. So IGST cannot come into picture. First one is IGST, which is not correct. Deemed sale of service, this is also not correct. This is also IGST, not correct. CGST 45,000, SGST 45,000, and full credit is allowed to Amazing Private Limited. Perfect. This is the answer. So answer is option D, my dear friends. No doubt about it. Next, finally, one more interesting point. Like this 2 marks each question, no doubt about it, sir. Very scoring area. Sir, MCQ is one such area where you definitely have to score some good marks. No compromise. Then, Super Trip India purchases 1,000 air tickets in bulk for an amount of 1,000 per ticket from Zoom Air. That means what? In the hands of Zoom Air, how much is the value? 1,000 into 1,000. It becomes how much? 10,000, 1 lakh, 10 lakhs. On 10 lakhs, 18% GST, which is 1.8 lakhs. This will become liability for Zoom Air and provides booking of air ticket facility at its electronic platform to the customers on its own account. So first they purchase 1,000 tickets in bulk and they are selling through their own portal. Supertrip was able to sell only 808 tickets, for which total amount collected from customers was 15 lakhs. 15 lakhs. But out of this 15 lakhs, it's very clear that on 10 lakhs, already who's paying the tax? Who's paying the tax already, my dear friends? They're paying the tax on this 10 lakhs by Zoom Air. That will become input tax credit for Supertrip. No doubt about it. Then, as per the agreement, remaining 200 tickets purchased by Supertrip from Zoom Air got lapsed. Very common. And the amount was forfeited by Zoom Air. Rate of TCS is 1%. First, story of TCS will not come. TCS will come only when we supply through another e-commerce operator. Here it's not, we didn't supply. Here it is sold at bulk. So this is not the answer. Supertrip is acting as an agent of Zoom Air and shall be liable to pay GST of 126 and no GST will be payable by Zoom Air. Nonsense. Supertrip shall be liable to pay GST of 90,000. How 90,000? On 5 lakhs? 18%. That is 90,000. Correct. Zoom Air shall be liable to pay GST of 1,80,000. 100% this answer is correct. So answer is, my dear friends, option C, my dear friends. Because whatever GST Supertrip will charge, whatever GST Zoom Air will charge from Supertrip, that will become input tax credit for Supertrip. No doubt about it. And they sold for 15 lakhs. On 15 lakhs, they'll calculate GST, reduce 1.8 lakhs, whatever they paid on inward supply as input tax credit. Balance only they'll pay to the government. Pretty simple, but pretty powerful. Next point. That's it. So these are the 5 interesting questions on the basis of the first case study what we have. Now we'll have 3, 4 more independent questions, but they are multiple choice questions, but they are not case study based. See that. First, 6th question. Quality Bells Private Limited, registered under GST in Chennai, Tamil Nadu, provided following outward supplies in the current year. See, what did they provide? Intrastate supply, taxable 40 lakhs, exempt 50 lakhs. Interstate supply, zero rated supply, taxable 30 lakhs, exempt 10 lakhs. Clear? Next point. Supply of goods procured from China. Supply of goods procured from China, directly from China to UK, without such goods entering into India. So this is called out and out supplies, which is neither regarded as supply of goods nor regarded as supply of service. I repeat, my dear friends, out and out supplies is neither regarded as supply of goods nor regarded as supply of service. Next, supply of goods imported from UK in high seas to a local vendor by way of endorsement of document of title to the goods before clearance for home consumption. This is also covered in Schedule 3, which are neither regarded as supply of goods nor regarded as supply of services. What is the question they asked? Compute aggregate turnover. This is not considered. This is not considered. 40 plus 15, 55 lakhs. This is 40 lakhs. Total 95 lakhs. And I'm sure we know that aggregate turnover is defined by section 2.6, which covers all taxable supplies, exempt supplies, interstate supplies, and exports on all India basis under same ban. So answer is option A, my dear friends, which is 95 lakhs. Clear? An interesting small question on the concept of aggregate turnover. Next point. Which of the following statement is correct in respect of warehousing under customs? Special warehouses are not under physical control of customs authorities. Nonsense. Special warehouses is clearly under control of customs authorities only. Second, importer of warehoused goods is required to submit bond for an amount equal to twice the amount of duty involved. This is also wrong, my dear friends, because we are required to execute a bond equal to thrice the amount of duty, not twice. Third point. In case of imported goods, in case of what goods? Imported goods for use in any 100% EOU, the warehousing period for capital goods is till their expanding, and for goods other than capital good, it is till their expanding or consumption. 100% correct answer. The period of time limit of 1 year and all will not apply in case of EOUs, EHTPs and STPs. In other cases, only 1 year concept will apply. So answer is option C, my dear friends. Next. Question number 8. No drawback of import duty will be allowed in respect of dash. Drawback, if they have been used after importation. So we talk about section 74, where some cases drawback is not allowed. In general, drawback is allowed based on length of usage, not more than 3 months, 3 months to 6 months, 6 months to 9 months, different percentage are prescribed in the law. But for some products, if they are exported after use, then there is no question of duty drawback. So first classic example, wearing apparel, 100% no duty drawback. Tea chest, no duty drawback. Silver utensils, this is not covered. Exposed cinematograph film passed by board of film censors in India, this is also covered. So these are the 3 cases where duty drawback is not allowed if they are put to use after importation. So 1, 2, and 4. So when I say 1, 2, and 4, answer is option C, my dear friends. Done. So with this discussion, we are done with the concept of multiple choice questions. That is a case study based questions and also independent questions. Now let's look at full-fledged questions which have come in the exam and understand how do we tackle them in the exam so that we get a good clarity of thought, my dear friends. Are we ready? Everyone? Good. Let's start. Adityanath Private Limited is registered under GST in the state of Uttar Pradesh. It is engaged in supplying 3 products, alpha, beta, gamma, from its factory located in Rampur, Uttar Pradesh. Product alpha and product beta are taxable as expected, whereas product gamma is exempt from GST. Alpha and beta are taxable and gamma is exempt. Besides, it also supplies cigarettes from its factory located in Kanpur and also owns a petrol pump in Lucknow. It is also engaged in supplying certain services. And we all know that cigarette is one such product which is covered in old law also and GST also. And petrol, we know that 5 petroleum products have been temporarily kept outside GST. Petroleum crude, high-speed diesel, motor spirit, natural gas, aviation, turbine fuel. These are the 5 petroleum products which have been temporarily kept outside GST. Next point. It has furnished the following information with regard to the supplies made by it in the month of August. First, supply of product alpha. Do we have to pay GST? Yes. Because they clearly told alpha is taxable and beta is what? Exempt. Supply of management consultancy services. These also taxable. Renting of commercial product, commercial complex, taxable. So let me tell you, renting of a residential building for residential purpose is exempt in GST. But when you talk about a commercial property, definitely it is taxable. Next point. Export of product beta. So export is covered in zero rated supply. And if it's under LUT, there will be no tax. Export is a zero rated supply. Under bond or LUT, if you go, there is no question of payment of output GST. And whatever input tax credit is there, that also we can claim it as refund. Next. Export of consultancy services, 20 lakhs, including exports made to Nepal-based company of 5 lakh rupees. Payment is received in Indian currency in the said case. Even though it is Indian currency, my dear friends, it is still regarded as exports. Because in case of certain exports to certain notified countries, payment can be received in Indian currency also. Classic example is in case of export to Nepal, RBI regulations allow receipt of currency in Indian rupees. That is the reason why this is also export, this is also zero rated supply, here also no tax. Next, sale of building, excluding stamp duty value of 2.5 lakhs, being 2% of value adopted for paying stamp duty. Then what is stamp duty value? 2,50,000 into 100 divided by 2. That is 1 crore 25 lakhs is my stamp duty value. And selling price is 2.5 crores. And always it is important to note, my dear friends, that when we say that 1 crore 25 lakhs is my stamp duty value, that is important because whenever you are dealing in both taxable as well as exempted, whatever input credit is there related to both, we technically call it as common credit. And out of the common credit, how much was related to exempt turnover, that we have to reverse it and we have to pay that. And when you talk about exempted supply also includes sale of building. And in case of sale of building, the value considered will be stamp duty value. Entire consideration is received post issuance of completion certificates. Obviously, because if it is before OC, GST will apply, no doubt about it. Then interest received on investment in fixed deposit with money bank 10,50,000. This is also exempt. But it is not considered for the purpose of reversal. Exempt, but not considered for reversal purpose. Next, sale of shares of a public company, purchase price 2 crore 40 lakhs, sale price 2 crore 50 lakhs. In that case, we will consider 1% of sale value to calculate exempt supply. In case of transactions in securities, clear? Then supply of cigarettes 1 crore, Gst Liability 28%. So this will become taxable under GST. Supply of petrol and diesel, this is a non-taxable supply. But let me tell you, non-taxable supply is covered in exempt supply. Non-taxable supply is covered in what supply, my dear friends? Exempt supply. Non-taxable supply is covered in exempt supply. So when non-taxable supply is covered in exempt supply, automatically what will happen? It is considered for the purpose of reversal. But we don't consider the value of VAT. We don't consider the value of excise duty. So from 80 lakhs, we'll reduce this 12.5. We'll also reduce 5 lakhs because excise duty VAT is not considered. Then amount received from Durga Das Private Limited of Lucknow, Uttar Pradesh. It has sponsored the business exhibition organized in Delhi by Adityanath Private Limited. Amount received from whom, sir? Amount received from Durga Private Limited of Lucknow, Uttar Pradesh. It has sponsored business exhibition organized in Delhi by Adityanath. So very good, my dear friends. So this Durga Das Private Limited is the recipient. And our supplier name is what? Adityanath Private Limited. When my supplier is Aditya, when we are Adityanath Private Limited, my dear friends, the sponsorship service sponsorship service, when it is provided to body corporate or firm. Sponsorship service provided to what, sir? Body corporate or firm. This is covered under RCM, reverse charge mechanism. So what will happen is Durga Das Private Limited is liable to pay GST. And for Adityanath, my dear friends, it is considered in exempt supply for the purpose of calculating reversal. That's an important point to be kept in mind. Next. With the help of above mentioned information, compute the gross GST liability of Adityanath for the month of August on outward supplies made by during the said period, assuming that GST rate on outward supply of goods and services here 12% and 18% respectively. So for goods 12%, services 18%. Unless otherwise specified, ignore CGST, SGST or IGST. Exports made by Adityanath Private Limited, if any, have been made to persons other than distinct or related persons and are made by furnishing LUT without payment of IGST. Very interesting. Come on. How do I calculate my liability, sir? First of all, on 50 lakhs, will GST come into picture? Yes. This is 18%. How much? 9 lakhs. Product alpha. What is the rates they have given? For goods, 12%. Service, 18%. So it is into 12%. It becomes 6 lakhs. Here, no tax. Here, 50 lakhs into 18%, which comes to 9 lakhs. This is also 18%, which comes to 9 lakhs. Clear now, friends? And below this 0 supplies and all, there is no question of tax. Sale of building, there is no question of tax. And interest is investment in FD, that is also exempt supply. Sale of shares of public company, that is also not considered. Cigarettes, 1 crore. 1 crore is a value. And what is the GST figure they have given, my dear friends? Come on, GST is how much? 28%. Which comes to 28 lakhs. That's it. 6 lakhs plus 9 lakh plus 9 lakh plus 28 lakhs. 15 plus 9, 24. 24 plus 28, which comes to 52 lakhs. Therefore, tax liability will work out to 52 lakhs. This is the output tax for Adityanath Private Limited. Very clearly, my dear friends. Next line. In the above question, all other things remaining same, compute the net GST payable from what ledger? Cash ledger. Wow. So they're talking about output tax minus input tax credit. If Adityanath Private Limited furnishes following additional information, consideration paid for repair of machinery used for manufacturing product Alpha by George Inc. of USA. Said machinery was sent to George Inc. in August for carrying out the repair work on the same. In this transaction, my dear friends, place of supply will become US. Why? These are called performance-based services. In case of, as per section 13(3) of IGST Act, in case of goods where physical work on the goods is involved, place of supply is the place where, place of supply is very clearly the place where goods are located or goods are basically physically made available. So place of supply will be US, supply also in US. So there is no question of GST. So there is no question of what, my dear friends? GST. So there is no question of GST, there is no question of input tax credit. When there is no question of GST, there is no question of what, my dear friends? Input tax credit. Clear with that point, everybody? Next slide. Life insurance premium paid by the company for life insurance of the employees as per policy of the company. But there is no legal obligations for such insurance for employees. So this becomes a blocked credit. Let me tell you why. As per section 17(5), life insurance, medical insurance credit is blocked unless it is being provided as a statutory obligation. If it is provided as a statutory obligation, then definitely credit is allowed. Audit fees paid, ITC allowed. Raw material purchased 10 lakhs, including raw material of 1,50,000 imported from China. BCD 15,000, no credit. Social welfare surcharge, no credit. And integrated tax, this we can claim ITC. So on 10 lakhs, in this 10 lakhs, 1.5 lakhs is imports. 8.5 lakhs is local. Transportation charges paid for transporting the goods. How much we paid? 5 lakhs. 4 lakhs is paid to GTA, registered in Uttar Pradesh. And 1 lakh is paid for transport of goods by horse-pulled carts. Wow. GST applicable on services of GTA is 5%. Once it is 5%, RCM will come. So on this 4 lakhs, RCM provisions will come into picture. And this 1 lakh, my dear friends, let me tell you, this will become straight away exempt because service by way of transportation of goods by road, except the services of GTA, is exempt. So service by way of transportation of goods by road is exempt. However, if it is GTA service, that will definitely become taxable. Then, telephone expenses paid. Such expenses pertain to the bills for landline phone installed in the factory and mobile phones given to employees for official use. No doubt, claim ITC. Bank charges paid towards company current account maintained with Money Bank. On this also, whatever GST we pay, we will claim ITC. Legal service received from an advocate during the period only in relation to product beta. only in relation to product beta means this is, I'll write an interesting line here. This is not a common credit. This is not a common credit because related only towards taxable supply. What is common credit? Common credit is that credit which is related to both taxable as well as exempt. Then only we call the credit as common credit. No doubt about it, my dear friends. The story of common credit will come only when it is related to both taxable as well as exempted. If it related only towards taxable, then it is not regarded as common credit. Clear? Come on. Assume that rates of GST on all inward supply of goods services are 12% and 18% respectively, unless otherwise specified. Ignore CGST, SGST, IGST for the sake of simplicity. Subject to the information given above, assume that all the other conditions necessary for availing ITC have been fulfilled. Turnover of Adityanath was 40 crores in preceding financial year. That is the reason why legal service became taxable. If not, legal service would have become exempt. The inputs and input services received during the August are commonly used for making all outward supplies unless otherwise specified. Opening balance of credit ledger for relevant tax period is nil. So first let me calculate what is my common credit. What is my common credit? First one, no GST. Second one, blocked. Audit fees will claim credit. How much is the audit fees figure? 6,50,000 into 18%. 6,50,000, right? 6,50,000 into what percent, my dear friends? 6,50,000 into 18%. It is coming to 1,17,000. Then next what? Raw material purchased for raw material local 8,50,000 into 12%, which is coming to how much, my dear friends? 1,02,000. That anyways I'll claim. Then IGST on import. How much is the IGST on import? 29,970. Then what else? RCM GDA. How much is that? 4 lakh into 5%, which is 20,000. Correct, no friends? RCM GDA is 4 lakh into what percent? 5%. Then telephone expenses 4,25,000 into 18%, which is 76,500. And bank charges. How much is the bank charges? 2 lakhs. On 2 lakh, 18% is 36,000. On 2 lakh, 18% is how much, my dear friends? 36,000. But I will not tell this legal services common credit because that is separate credit for me. Clear? Come on, how much is my common credit? 1,17,000 plus 1,02,000, 29,970, 20,000, 76,500, 36,000. So my common credit will be 3,81,470. 3,81,470. No doubt about it. Now tell me. Common credit attributable. Common credit, what, my dear friends? Attributable to exempt supplies. Common credit attributable to exempt supply. Now let's see what is the common credit attributable to exempt supply. First of all, let us calculate the figure of how much is my exempt supply. Then full clarity will come into the picture. No doubt about it. So if you see the question carefully, what is the value of my exempt supply? Come on. Gamma is exempt. How much is gamma? 1 crore. Plus building 1 crore 25 lakhs. That means what? 2 crores 25 lakhs. 2 crore 25 lakhs. Plus this 1%, 2,50,000. 2 crores 25 lakhs. 2 crore 25 lakhs plus 2,50,000. 2 crores 27 lakh 50,000 so far figure. Correct, friends? Plus, what else? 80 lakhs is also what? Petrol and diesel. That is also is covered here. Understand? Come on, speak out, friends. Sir, let me put it here. Let me put it here. How much is covered in exam supply? 1 crore figure is exam supply. 1 crore figure is exam supply. No doubt about it. Plus, let me write this way. Separately, let me open one more sheet so that it will be easy for us to write the data. Yeah, shall we start writing? Speak out. Come on. Let me open the sheet one after the other. First one, gamma is exempt. Alpha is taxable, gamma is exempt. Let me calculate my total turnover also. Total turnover, exempt turnover. Total turnover, exempt turnover. Alpha. How much is the alpha turnover, my dear friends? Come on, let me go back. Alpha turnover is 50 lakhs. That is considered for total turnover, but that's not considered for exempt turnover. Then what else? That's considered for total, but not for exempt. Then gamma figure. How much is the figure, my dear friends? 1 crore. Gamma figure 1 crore is considered for total and also considered for exempt turnover. Total and also for what, my dear friends? Exempt turnover. Next, what else? Management consultancy, 50 lakhs. 50 lakhs, that is very clearly taxable turnover, but that is not exempt turnover. Then renting, 50 lakhs. Next one, what else? Export of beta. Export of beta, 1 crore. Export of consultancy, 20 lakhs. So both exports, 1 crore, 20 lakhs, both exports together. 1 crore, 20 lakhs. Getting clarity, friends? 1 crore, 20 lakhs. And this is not considered in exempt turnover. Then, sale of building. How much is the value, my dear friends? We sold it for 2 crores, 50 lakhs. Please understand that we sold it for 2 crores, 50 lakhs. But in that, what is the stamp duty value? Stamp duty value is how much, my dear friends? Stamp duty value is only 1 crore 25 lakhs. How do we know that? Because we paid 2% of the stamp duty value. Agreed? Speak out. So what is taken into account? 1 crore 25 lakhs, that will be considered, which is nothing but stamp duty value. Clear, everybody? Come on. Building. 1 crore 25 lakhs. 1 crore 25 lakhs. That is considered for exempt turnover also. Next, what else? Interest on fixed deposit, 10 lakh 50,000, my dear friends. Let me tell you, this interest on fixed deposit is considered for total turnover, but it is not considered for exempt turnover for the purpose of reversal, my dear friends. That's an interesting point actually, because it is not considered for the purpose of exempt turnover when we talk about reversal. Next, what else? Shares, 2 crore 50 lakhs, but we'll take only 1%. That is 2 lakh 50,000. Supply of cigarettes. Supply of cigarettes, what is the figure, my dear friends? 1 crore, but that is including excise duty of 12,50,000. So from 1 crore figure, if I reduce 12,50,000, it comes to 87,50,000. $87,50,000. Friends, I hope you understand this point, my dear friends. But is the cigarette taxable under GST? Definitely, cigarette is taxable under GST, which is clearly given in the question. Getting clarity, everybody? Come on, please reply. What all have been considered so far? So we have considered so far, my dear friends, value of the building. We have considered value of the share. We have considered gamma. Are you understanding, everybody? Then what is the last figure? Petrol and diesel, 80 lakhs. But in that VAT is 5 lakhs, excise duty is 12,50,000. So from 80 lakhs, I have to reduce 5 lakhs and 12,50,000. From 80 lakhs, if I reduce 5 lakhs and if I reduce 12,50,000, it comes to 62,50,000. $62,50,000. And what are the last one, my dear friends? Last one is about sponsorship service. That is also clearly covered in exempt turnover. That is RCM supplies. 6 lakhs is the figure. Considered for total, considered for exempt. I hope you are getting clarity, my dear friends. Come on. So what all we consider for exempt turnover, my dear friends? First, tax payable and reverse charge mechanism. How much is the figure? 6 lakhs. And in case of building, what is the figure we have taken? 1 crore, 25 lakhs into account. And for shares, we have taken the value of 2,50,000. And for gamma, we have taken 1 crore. Getting clarity, my dear friends? Speak out. And petrol and diesel, 62,50,000. How much is that? Let's calculate. One crore, 25 lakhs, 2,50,000, 62,50,000 plus 6 lakhs. It comes to 2 crores 96 lakhs. This became my exempt turnover. This became my what turnover, my dear friends? Exempt turnover. And when I talk about total turnover, what is my total turnover? 50 lakhs plus 1 crore plus 50 lakhs plus another 50 lakhs plus 1 crore 20 lakhs. 1 second. Small number difference. 50 lakhs plus 1 crore plus 50 lakhs plus again 50 lakhs plus 1 crore 20 lakhs, 1 crore 25 lakhs, 10 lakhs 50,000, 2 lakhs 50,000, 87 lakhs 50,000, 62 lakhs 50,000 plus 6 lakhs. It is coming to 6 crore 64 lakhs. Is it so? Is 6 crores only? 6 crores 64 lakhs is the figure what we got, my dear friends. 10,000, 10,000. 6 crores 64 lakhs. That is my figure of total turnover. Terrific numbers, my dear friends. You have to be very, 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 very careful in the exam. No doubt about it. I hope you're understanding, my dear friends. Speak out. So what is the working we have completed so far? We completed the working of common credits. Then we have done the working of exempt turnover and the figure of total turnover. Going back to the discussion. How much is my common credit attributable to exempt supply? Is equal to 3,81,470 into 2 crores 96 lakhs. Correct only? It was 2 crore 96 lakhs only. Let me go back and check the figures once. 2 crores 96 lakhs, yes. And 6 crores 64 lakhs divided by 6 crores 64 lakhs. Let me calculate. 2 crore 96 lakhs divided by 6 crores 64 lakhs into 381 470, which is coming to 1,70,053. This becomes my credit attributable to my exempt supplies. Credit attributable to my what supplies, my dear friends? Exempt supply. Therefore, my credit available will be 3,81,470 minus 1,70,053 plus 3,50,000 into 18%. This is because of lawyer service, which is related only towards beta, which they clearly told in the question. So 381,470. First of all, how much is 3,50,000 into 18%? That is coming to 63,000. So 381,470 plus 63,000 minus 170,053. So it is coming to 2,74,417. This becomes my total credit, which is available, my dear friends. I hope this point is making sense for all of you. Yeah. So 274,417 is my total credit, which is available. And already we discussed that, my dear friends, that my output tax in the previous question we solved, it is 52 lakhs less input tax credit 2,74,417. 52 lakhs minus 274,417. It is coming to 49,25,583. This is payable using electronic cash ledger. And we are also required to pay some RCM using some cash ledger. What is that RCM we have to pay using cash ledger? What is the RCM we are required to pay using cash ledger is number 1, GTA. Number 2, legal services. On GTA, the figure is 4 lakhs into 5%. That is how much? 20,000. And legal service 3.5 lakhs into 18%, which comes to 63,000. Total 83,000. So total what we have to pay using electronic cash ledger will be 49,25,583, 49,25,583 plus 83,000. Total is coming to 50 lakhs 8,583. This becomes my total payable using electronic cash ledger. I totally understand that this question has been a slightly lengthy question comparatively, but all set and done, my dear friends, this kind of question keeps coming in the exam at CA final level to test your complete conceptual clarity on the beautiful topic of input tax credit, which is very interesting and very powerful, which have been discussed during the classes at a stretch and at length, because there's one such topic where almost every time question keeps coming in the exam on input tax credit. But you have to be very, very careful while tackling the problem in terms of calculating what are all RCM, what we can take credit, what we can't take credit, all the areas we have to be very, very cautious and very, very careful. Then your answer will be very perfect. Next, let's look at a few more small interesting questions now. Big question is overruns. Determine place of supply in the following independent cases. First, Mr. Saukar, New Delhi, boards New Delhi to Savai Madhopur train at New Delhi. Saukar sells the goods taken on board by him at New Delhi in the train at Bharatpur during the journey. Straight away, my dear friends, place of supply will be New Delhi. Simple reason, because of section 10(1)(e). In case of goods supplied on board a conveyance, goods supplied what, sir? On board a conveyance, place of supply is the place where goods are taken on board. That is the answer straight away. Then, Vidyut Private Limited imports electric food processor from USA for its electronic store in Varanasi, UP. They are registered in UP. Place of supply is UP. Section 11A. In case of import of goods, place of supply will be the location of importer. Then, Atmaram, unregistered under GST, is a manager in bank. He is transferred from Bareilly, UP to Bhopal, Madhya Pradesh. Atmaram's family is stationed in Kanpur, UP. He hires Gokul Carriers of Lucknow, UP, registered in UP, to transport his household goods from Kanpur to Bhopal. Let me tell you, place of supply will be Kanpur. And this concept is given by section 12H, where place of supply in case of goods, that is service by way of transportation of goods, including mail and courier. If it is supplied to a registered person, place of supply will be location of such person. Unregistered person, place of supply is the place where goods are handed over for their transportation. And where they are handed over at Kanpur. So place of supply becomes Kanpur. Then Bolunath, a resident of New Delhi, opens his savings account in New Delhi branch of Best Bank after undergoing KYC process. He goes to Amritsar for some official work and withdraws money from Best Bank's ATM in Amritsar, thereby crossing this limit of free ATM withdrawals. Thus, withdrawal charges were levied by Best Bank. Let me tell you, this concept of place of supply is given by section 1212, and place of supply will be New Delhi. Because in case of banking and financial services, including stockbroking, place of supply is the place where location of recipient in the records of supplier. But the location of recipient is not available, it will become location of supplier. But here in the bank records, already location of Bolunath is available. That's nothing but New Delhi. Are we getting clarity on this point? That's it. So when there is a question on the concept of what, my dear friends, on the concept of place of supply, which is dealt by IGST Act, but not by CGST Act. Next, question number 12. Let's look at that also. Chandra is engaged in supplying certain goods in the state of Punjab from its factory located in Jalandhar, Punjab. He is not yet registered under GST. Wow. As his turnover is moving towards applicable threshold limit for registration under GST, he approaches his tax advisor to ascertain the applicability of GST on the supply made by him. So he got it out whether GST is applicable or not applicable. His tax advisor is unable to determine whether supply of goods by Chandra amounts to supply under GST law and also the classification of the goods. He advises Chandra to apply for advance ruling. Very good advice in respect of said issues. He told Chandra that advance ruling would bring him certainty and transparency in respect of said issues, correct? And would avoid litigation later. Chandra agrees with his view, but has some apprehensions. We will clarify the apprehensions. No. First one, you are required to advise Chandra with respect to following. Tax advisor asked Chandra to get registered under GST law before applying for advance ruling, as only unregistered person can apply for the same. Wrong. Because any person who is registered or any person desirous or interested to take registration under GST can apply for advance ruling. So it is not mandatory for a person seeking advance ruling to be registered. Second bit, can Chandra seek advance ruling to determine whether supply of goods by Chandra amount to supply, and if yes, to determine classification? 100% answer is yes. He can apply whether to seek a transaction is supply or not, and he can also apply for the purpose of classification. Next bit, Chandra is doubtful whether he can seek advance ruling in relation to a transaction already undertaken. Answer is yes. He can do that definitely, because advance ruling can be sought for the transaction which is already undertaken or proposed to be undertaken. Finally, Chandra is apprehensive that AAR may take years to pronounce its ruling. Nonsense. It will not take more than 90 days to pronounce the ruling. His apprehension is not correct. Next, let's move forward, my dear friends. Question number 13. Arihant is engaged in supply of taxable goods and is registered in the state of Orissa. A demand notice under GST of 50 lakhs is served on him on 5th April. On 10th April, despite having knowledge of the notice, Arihant transferred his ancestral property located in Punjab in the name of his wife Soma for a consideration of 2 lakhs without taking any permission from the authorities. The value of the stamp duty is 80 lakhs. Subsequently, he filed a reply to the notice stating that he would not be able to pay the amount of tax demanded due to his financial situation. Distressed financial situation. Determine validity of the act of transferring property by Arihant to his wife. That is definitely not valid. And in fact, this is given by section 81. If there is a transfer of property, and that too in case where there is a demand which is raised in the law, the transaction is void. However, if it is made for adequate consideration in good faith and without notice of pending proceedings, then it is not regarded as void. But in this given case, he already has a notice and it is not made for adequate consideration. So definitely, my dear friends, this transaction is void and department will definitely recover this property. No doubt about it. Next question. State the prosecution, arrest and bail implication, if any, in respect of following independent cases. Case number 1. Ashura, what he has done, my dear friends? Fraudulently avails input tax credit. How much did he avail? He has availed input tax credit of 200 lakhs. So it did not cross 200. It is up to 200 without any invoice or bill. However, he is yet to utilize the same. So my dear friends, prosecution will be up to 1 year. And this will be a non-cognizable and bailable. Cognizable story will come only if it is more than 5 crores. That too in case where issued invoice without supply, supplied without invoice, taken input tax credit, and last case, 4th case, collected but not paid within 3 months. Which part? Bahubali fraudulently avails refund of tax of 550 lakhs. The said tax has been recovered from buyer also. In that case, this will become up to 550 lakhs. No, this will become up to 5 years. No doubt about it. Up to how much, my dear friends? 5 years. And this is also non-cognizable and bailable. I hope we are getting clarity. Then, Chintamani knowingly supplies false information sought by GST officer and the amount involved is 250 lakhs. Then it becomes, my dear friends, up to 3 years. Because more than 200 does not exceed 500. And this is also non-cognizable and bailable. Last one. Deen Dayal collects 650 lakhs as tax in January from its clients, but has deposited only 50 lakhs with government till date. This will straight away attract imprisonment up to 5 years. And moreover, this will be cognizable and non-bailable. When I say cognizable, they can arrest without arrest warrant. And this arrest is ordered by commissioner. And thus, that too, this arrest can be done without arrest warrant, my dear friends. That's why this offense is called cognizable and non-bailable. Small concept based on the concept of what, my dear friends, based on provisions of penalties, offenses, and prosecution. Small but interesting. Next. Question number 50. Mr. Ajit Basu is a director of Dharma Private Limited of Kolkata for the past 5 years. He resigned from the company on 1st April of the current financial year. Very good. He received notice of demand on 5th July for recovery of tax dues of Dharma Private Limited pertaining to the preceding financial year, as the dues cannot be recovered from the company owing to its poor financial condition. Ajit Basu is of the view that tax dues of the Dharma Private Limited cannot be recovered from him, as he is no more a director. You are required to advise him on the same, taking into account the relevant provisions. So this concept is given by section 89, liability of directors of the private company, where it clearly says if there is any tax, interest, or penalty due from the private company, then all the directors are jointly and severally liable for the dues at that time when they were a director. However, if director proves that there is no gross negligence or there is no breach of duty, or there is no misfeasance on the part of Ajit Basu, then, my dear friends, then very clearly, my dear friends, if he proves that it is not because of his gross negligence or misfeasance or breach of duty, then he is not liable. Next point. Raghuram Private Limited, Pune, Maharashtra, provides housekeeping services. Company supplies its services through e-commerce website owned and managed by TechnoSavvy Private Limited, and turnover of Raghuram is 18 lakhs. In this transaction, my dear friends, ECO is liable to pay GST because this is covered under section 9(5). Advise Raghuram as to whether it is required to obtain registration. Obviously, answer is no. Obviously, answer is what, my dear friends? No, because it's a supply to the e-commerce operator and ECO is liable to pay GST because of 9(5). Then obviously there is no requirement to take registration and threshold limit is not crossed. Would advice be different if Raghuram sells ready-made garments? Then definitely registration is required because 9(5) talks only about 3 cases. Number one, services of transportation of passengers by way of radio taxi, motor cab, maxi cab. Number 2, motorcycle also. Number 2, services of hotel accommodation except when hotel is liable to register. Number 3, services of housekeeping except when person supplying service is liable to be registered. That point is clearly given in the law. Make sense, guys? Excellent. Next. Question number 17. Radheshyam. Wow. Brilliant. Radheshyam is engaged in manufacture of goods in Rajasthan. It imported certain goods for using in manufacture of finished goods in the month of May. However, it did not clear the goods from the port for home consumption. That means what? It presented an into-bond bill of entry. That means bill of entry for warehousing. When is it filed? 14 May. Assessable value on that date was $235,000. Order permitting the deposit of goods in warehouse for 4 months was issued on 21st May. When is the order passed, my dear friends? Order is passed on 21st of May. Radheshyam deposited the goods in warehouse on the same day, but did not clear the goods even after warehousing period got over on 21st September. Generally, the warehousing period is 90 days. In fact, it is 1 year, but after 90 days, interest will start being levied. Here, they got time till 21st September. A notice was issued under section 72, demanding duty and interest, and they cleared the goods on 14th October. Customs duty paid on removal was 8,28,000. You are required to compute interest payable, assuming that they are not meant for use in EOU, STP, EHTP. Because for EOU, STP, EHTP, provisions of interest and time limits will not apply. Now, what is the story? Interest will apply at the rate of 15% per annum after expiry of 90 days. That means interest will start from 91st day, my dear friends. I repeat, interest will start from which date, sir? Interest will start from 91st day. 91st day will calculate from when? Will calculate from when, sir? Come on. When is it deposited? When is the order passed? The order was passed on 21st of May, my dear friends. So on 21st of May, what is 90 days? Come on. May 10 days, June 30 days, July 31 days. Total how much? 36, 71. 90 days in August. 90 days in August. So 90th day will complete them. 21st May order is passed, no? So we'll start calculating from 22nd. So when I start calculating from 22nd, my dear friends, how much will it work out to? 22nd of May, we'll start calculation for 90 days. 90 days will start calculation from when, my dear friends? 22nd. So 22nd means it becomes 10 days in May, 30 days in June, 31 days in July. It becomes 71, 90. So 90 days. 90 days will expire on 19th of August. So friends, when will 90 days expire, my dear friends? 90 days will expire on 19th of August. So getting clarity? Speak out. So interest will start from which date? Interest will start from 20th August. 20th of August. So 20th August interest will start, mean interest will come for August 12 days. Why August 12 days? From 20th we have to start. So now 20th means it becomes 12 days. September how many days? 30 days in September. October when did we clear? 14 days in October. So 12 plus 30 plus 14. Total 56 days delay. So interest will be 8,28,000 into 15% into 56 divided by 365. 8,28,000 into 15% into 56 divided by 365. It is coming to how much, my dear friends? 19,055.3419,055. That becomes my interest payable, and interest will start from when, my dear friends? Interest will start from expiry of 90 days. So that point is very clear, my dear friends. If it's other than EOU, STP, EHTP, my dear friends, beyond a period of 90 days, interest will be levied at the rate of 15% per annum from expiry of 90 days till the date of payment of duty. Next. 18th question. Lunar Technologies Limited has imported a machine from its holding company in Japan on 25th February after paying customs duty of 38 lakhs for use in factory, and re-exported on 10th October. 25th Feb to 10th October. 25th February means this is October. March, April, May, June, July, August, September, October. That means what? Greater than 6 months, not more than 9 months. You are required to advise Lunar Technologies regarding duty drawback that is available to the company when it sends back the same machine to the holding company after completion of project. So, my dear friends, if it is not more than 3 months, it is straight away 95%. More than 3 months, not more than 6 months, it is 85%. More than 6 months, not more than 9 months, let me tell you, my dear friends, it is 75%. Duty drawback will be 38 lakhs into 75%. In fact, this concept is given by section 74. 28 lakhs 50,000. That becomes my amount of duty drawback. But below they asked, will the answer be different if other things remaining same? Instead of machine, company had imported and re-exported X-ray film after using the same. If it is X-ray film, my dear friends, no duty drawback, because in case of some goods exported after use, wearing apparel, teachers, X-ray films and all, there is no question of duty drawback if they are exported after use. This concept is clearly given in section 74. No doubt about it. Next. Dhruv Enterprises imported a machine from Japan in Jan for 48.75 lakhs. However, machine was exported back in June for repairs. Fantastic. Supplier had agreed to carry out the repairs as the machine was still in warranty period. Very good. And the fair cost of the repairs would cost 8.9 lakhs. Since the repair was expected to take a time of 6 months, Dhruv Enterprises requested the supplier to provide it another machine so that it would carry out its operation without hindrance in the meantime. According to the request, supplier provided it with another machine which was imported in the vessel during October. So generally, if goods imported or exported for repairs and then re-imported, then what will happen is duty will not be levied on full value, but duty will be levied only on the fair cost of repairs, plus insurance and freight, both the ways. But in this case, we are getting a new machine. There is an important condition which says that imported goods, exported goods, both must remain same. But here we are getting another machine. Value of new machine was 49.5 lakhs. Freight charge from load port to importation is 1.8. You are required to compute accessible value and duty payable. Custom duty rate is 10%, IGST 12%, social welfare surcharge 10%. So let me take the figure. 49 lakhs 50,000. Freight charges 1 lakh 80,000. Correct, no? Then what about insurance? 1.125% of FOB. 49 lakhs, 50,000 into 1.125%. 55,687.5. Total figure 49 lakhs 50,000 plus 1 lakh 80,000 plus 55,687.5. Total is 51 lakhs 85,687.5. BCD at the rate of 10%, which is 5 lakhs 18,569. SWS at the rate of 10% of BCD, 51,857. Total 51 lakhs 85,687. 51 85 687.5, 518,569, 518,557. 57 lakhs 56,113.5. And IGST will come at the rate of 12% on 57, 56, 113.5 into 12%. 6 lakhs 90,734. So therefore, my total duty will be ECD plus SWS plus IGST. How much is my BCD? 518,569 plus SWS 51,857 plus IGST 690,734. 12 lakhs 61,160. This becomes my total duty payable, which is BCD plus SWS plus IGST. Interesting concept on the provisions of customs duty. Are we clear, my dear friends? That's all. Why did we not apply the story of the fair cost of repairs? Because we did not get imported goods, exported goods must be one and the same. That is a precondition given in the law. That the imported goods, exported goods, both must be one and the same. If they are different, then these provisions of fair cost of repairs and all will not apply. We'll charge the duty on the entire value. Clear? Let's proceed. The last question in this RTP, my dear friends. Let's discuss that. Pursuant Limited is engaged in supply of goods. It imported certain raw material from Lumas Inc. of US. Lumas Inc. is controlled by Pursuant Inc., Pursuant Limited. In the given case, transaction value has been rejected since they are related. If transaction value is not acceptable, we look at the value of identical goods. If that is also not available, we look at the value of similar goods. If that also fails, my dear friends, we look at a method like a resale price method. That is also failing, we look at computed value, where we take the cost, add the markups and all, then derive at our assessable value. Clear, friends? See now. However, no similar identical goods are imported. That also failed. So rule 451. They requested authorities to determine value as per rule 8 of the said rules. So rule 7 is deductive value. Rule 8 is computed value. But the importer can request that we'll apply rule 8 but not rule 7. That too can be requested. That too can be reversed with the request of the importer and the approval of proper officer. So rule 7, rule 8 can be reversed, my dear friends. Instead of applying rule 7 first, we can apply rule 8. It furnishes following cost related data of imports. Cost of raw material 2,280, fabrication 1,140, other expenses 456, indirect cost 285. Normal profit margin is 20% of FOB, and FOB means all cost plus the transport cost from the foreign factory till the foreign port. That is also covered in the FOB. Freight from factory to port, this is considered in FOB. Loading charges, this is also considered in FOB. Air freight from US port to Indian port. Once we say that it is imported by air, my dear friends, freight is restricted to maximum 20% of FOB. This concept is given the law itself. Then exchange rate 69 per dollar. Insurance charges already given. Customs authorities are of the opinion that since value as per Rule 7 can be determined at 548, there is no need to apply Rule 8. Is the request legally tenable? Yes. Rule 7. Instead of applying Rule 7, Rule 8 can be applied. They can be reversed at the request of the importer with approval of the proper officer. If so, compute assessable value. What is assessable value? What is my cost? My actual cost is $2,280 plus $1,140 plus $456 plus $285. My total cost is $4,161. That is my total cost. Correct, my dear friends? Then, what is my profit margin? Profit margin, they told 20% of FOB. Other side, let me do the working of FOB, my dear friends. What is my FOB? $4,161 plus $285 plus $114. $4,161 plus $285 plus $114. $4,560. On that, 20%. So what is the cost, my dear friends? So let me calculate once again. Hold on. So what is the total cost? $4,161. And to that, to profit margin, how much is the profit margin they told? Profit margin is 20% of FOB. What is my FOB? My FOB figure is 4161 is my basic cost plus what is my freight. So total cost till FOB covers total cost plus profit margin, total cost plus profit margin plus my freight charges. So this 4560 is my total cost till port. To this, when I add my profit, I'll get my FOB. And they told profit figure is 20% of FOB. So can I say that when profit is 20% of FOB, then profit will be 25% of total cost? Is it acceptable? 100% answer is yes. We know pure mathematics. That will be 25% of 4560. Which is coming to $1,140, which is my profit margin. Which is my profit margin. So 4161 plus 1140, $5,301. Are we getting clarity, everybody? So speak out. Everyone. So what is my FOB price, my dear friends? In short, my FOB will be 4560 plus 1140. That becomes my FOB, which is nothing but 5,700. So when I calculate my freight, my dear friends, freight maximum will be 20% of FOB, which is 5,100 into 20%, $1,140. Insurance, how much they have given? $57. So 5301 plus 1140 plus 57, $6,498. So my value in Indian rupees will be 6,498 into 69 per dollar, 4,48,362. 4,48,362. That becomes my assessable value. Very, very interesting and wonderful question, my dear friends. Because you need to observe that they use the word profit margin is 20% of FOB. And to get that FOB, we should know the profit. So reverse working, what will you do? Profit will be 25% of total cost. 25% of 4560 is 1140. That's it. Perfect working. No doubt about it. So my dear friends, I hope we got a very good clarity on this concept set. Fantastic. So with this discussion, my dear friends, I'll close this RTP for May 2022, my dear friends. A very interesting discussion. High probability that question will trigger in the exam from this particular concept, my dear friends. So with this, I'll conclude and I wish you all the very best and I wish you all success, my dear friends. Do perform extremely well in the exam and come out with flying colors. All the very best. Take care. Thank you so much. And any doubts, feel free to get back. You can just drop in the forums. We'll be more than happy to reply. Or you can comment the YouTube video. There also will reply. Any doubts? We're always there to support you, my dear friends. Thank you so much. Take care. Bye-bye.